So it's almost the end of the tax year, and you would have probably been contacted already to have a look at whether you have maximized your tax deductions you can make in terms of retirement annuity contributions, and also the contributions you can make to a tax-free savings account investment. The model we're going to talk about today is our long-term growth tax-free savings account investment. We started running this portfolio almost 11 years ago now, in May 2015. It's targeting inflation +8, and it aims to have a high exposure to growth assets. And growth assets essentially are shares or equities and listed property. It includes some offshore exposure as well. Just looking at this graph shows you the benefit of investing in something that gives you that extra growth. If you'd have put 100 Rand into this portfolio just over 10 years ago when we started it, it would now have grown almost 2.5 times to 240 Rand. That's a lot stronger than if you'd have put it in cash. A number of the banks advertise that you should use your tax-free savings account to put cash into them. But actually, if you're going to hold things for the longer term, it's much better to allocate tax-free savings accounts to a more growthy type investment, especially if you're doing something like this for your children or your grandchildren, for example. So if you have a look at that graph, looking at the green line, you see that the green line would have grown from 100 Rand to 190 Rand. Compared to what you would get if you were in this growth portfolio, instead of getting 190 Rand, you would have got 240 Rand. Now, if you take that over a long period of time, that incremental growth really will make a significant difference. And then at the end, there will be no tax that will be applied to it. So we're going to have a look at one of the managers inside our tax-free savings long-term growth strategy, and that is the Truffle General Equity Fund. And we can see here just its performance over time, significantly outperforming the peer group, which is the gray line on this graph. If we have a look at its top 3 holdings, one is Naspers, the media and essentially software company, which owns a big stake in Tencent, Goldfields, which is a gold mining company, and FirstRand, which is a bank. And you can see the weights that they are in its portfolio, and then the returns over the last year, which have all been quite strong, but especially the gold mining company, Goldfields, is up over 170%. The next slide just has a look at the underlying asset classes. So are we invested in shares or cash or bonds, offshore shares? And this is what this graph shows, the purple lines or bars being the fund itself, the long-term growth strategy, and then the gray bars showing the flexible peer group. So the rest of the class essentially that's also quite aggressive. And we can see here that if you look to the far right, that in terms of growth assets, which is essentially local and foreign equity plus local and foreign property, almost 97% of this portfolio is invested purposefully in those type of growth assets. And that will give you the extra outperformance over the long term.